Well, good afternoon. Happy Friday, July 15th. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. No shortage of data this week. The economic calendar was packed with a lot of reports, the most significant of which came out on Wednesday. This is the Consumer Price Index. This is really the most largely watched indicator of inflation. That's what the media watches. That's what a lot of traders on Wall Street watches. This CPI report, there's lots of numbers within the numbers. There's the overall CPI, which came in at 9.1 against an expectation of around 8.7. But then there's also the core data, which strips out really volatile measures like food and energy. That still came in hotter than expected. Honestly, every single economic report we got this week, and there were a handful of them, came in hotter than expected, and that's not good news on the inflation front, not good news for mortgage interest rates. We can take a quick look here and talk about the CPI. You can see down here at the bottom on July the 13th, the numbers coming in higher than expectations. Bank of Canada raised its overall interest rate by 100 basis points against an expectation of 75. This is the Producer Price Index. This is another measure of inflation on the production side, and it came in hotter than expectations. And then we get retail sales. That came in hotter than expectations. Finally, consumer sentiment came in higher than expectations, just beating expectations across the board. And that has led traders to believe that there's a decent chance that the Fed is going to raise the Fed funds rate by a supersized full percentage point later this month at its July 26th, July 27th meeting. The policy statement coming at 2 p.m. Eastern time on July the 27th. So the market had already essentially priced in a 3/4 rate hike, 0.75%, which certainly is a substantial rate hike by all measures, but a full percentage point would be one of the largest in the modern era for the Fed. Now, there's been some backing off of that here in the past 12 hours. Some of the more hawkish members of the Fed have come out and publicly said they really want just a 1 percentage point rate, or excuse me, a 3/4 percentage point rate hike, a 75 basis point hike instead of a full percentage point. But still, though, we're talking maybe a 30 to 50% chance that come a week and a half from now, we're going to see the Fed bump the Fed funds rate by a full percentage point. That'll be interesting to watch. Really, this inflation situation has to get under control, and it's become the Fed's sole priority is to get inflation and price stability under control. The sooner that happens, the better off for interest rates, which means the better off for the housing market. Affordability has been impacted to such a level now. We are definitely seeing a distinct slowdown in the housing market. And that's begged the question, and I'm hearing this a lot in the circles, real estate circles that I run in, begs the question, does it really make sense now to buy? If you're a prospective home buyer, does it make sense to go out and go under contract when interest rates are now super high and housing prices have escalated so much? Does it make sense to go out and buy that home, or would you just be better off by waiting, maybe by waiting an entire year? And that's an idea that's worth teasing out because it's some salient points there, and it's natural that home buyers might feel that way. So I'm going to flip the screen back around here and just walk through a quick exercise. And let's talk about a $650,000 price point at an interest rate of about 5.5%. And if you're buying today, that's roughly what your interest rate would be. And let's assume that you're 95% financing. Your total monthly payment's going to have you right around $43.16 per month. Now, let's say that you wait a year and you say, I'm not going to buy in August of 2022. I'm going to skip this and I'm going to buy in August 2023. Well, we know real estate's not going to appreciate 20% year over year into perpetuity. We know that's going to slow down. Most economic projections will tell you here in the metro Atlanta area, we're looking somewhere between 8 to 12% appreciation by this time next year. So certainly throttling back a healthy dose, but not any sort of depreciation. But let's just assume something even more modest than that. Let's assume that homes here within the metro Atlanta area appreciate at just 5%, a very low measure by anyone's prognostication, just 5% year over year appreciation. And let's take a look of what it would look like if you did wait and you don't buy today at 5.5%. And let's be generous and assume that interest rates drop by a full percentage point, that we see a reduction in the overall 30-year fixed interest rate to a full percentage point down to 4.5%. And we wait and we buy in August of 2023 instead of closing in August of 2022. Now, home price will have gone up, right, by 5%. 5% of $650,000, that puts you at $682,500. But interest rates go down, so your interest rate is down at 4.5%. And yes, that will save you a little bit of money on a monthly basis. To be specific, it's going to save you $157 per month. That's no small chump change. And if you annualize that, you're talking about saving $1,884 per year. Certainly no small amount of change. But the lost appreciation by waiting is this 32,500 figure, this difference between this price and this price. So you just lost in family wealth or generational wealth, you just lost 32,500. And if you divide 32,500 and lost appreciation by $157 per month, it takes you 207 months to recoup the money that you lost, to recoup the 32,500. So if you're saving that $157 a month, we'll plan on about 17 years from the time you start saving before you've recaptured the 32,500 that you lost. In other words, it would be the year 2040 before that would be a good financial move. It would take you that long just to recapture 1 year's worth of lost equity. So dispelling a myth that it would make any sense to wait to buy. Listen, if you're in the market to buy, now's actually an ideal time. Interest rates have started to plateau. Even though inflation is still climbing, the market has already priced that in, but we're starting to see a little bit more inventory out there. Homes are sitting a little bit longer and fewer bidding wars. So now's a good time to get a deal on a property, and you haven't really seen interest rates escalate since the midway point through June. If I can be of any service to you over the weekend, don't hesitate to reach out, mark.milam@highlandmtg.com. Thanks.